All right, good morning, traders. Happy Monday. It is August 30th, so almost a new month here. New month, new you. All right, but let's get diving in here, though. I'm just going to assume the audio is working fine. I'm going to assume y'all can hear me, and we'll get started. So I'm sure a handful of you watched last night's video, the Sunday watch list video. So pretty much, those couple of things I covered last night, it's going to be the bulk of the focus here over the next handful of weeks. So, AMD, Tesla, Apple, Facebook, things of that nature. But let's get diving in here. Take a look at the futures. S&P 500's up a tad this morning. So, the only thing to take into consideration here is that we're up around +2 ATR. So, we're looking at a daily squeeze that hasn't fired to the upside. So there's certainly the potential this does fire, and we just continue to push from here. But there's also the potential, a little bit of a dip, maybe to your 8 or to your 21. But I do think all in all, bullish market. So I think the path of least resistance continues to be upward. And the same thing here for the Qs. So looks like technically as of this morning, the squeeze is firing. So could continue to rally. You could get a dip to your 8. You could get a dip to your 21. Both of which are dips I would want to buy. So anytime we're up here at +2 ATR, just take into consideration, you could get a little bit of downside before the next leg to the upside. But we do look good. We look good. We look good. The Dow. Dow looks pretty solid. Nice daily squeeze. So everything checks out here heading into the open. First place I want to focus on with y'all, though, is Facebook. So technology looks good. QQQ, XLK, NDX, however you want to look at that. Tech looks good, as does XLC, the communication sector. So something like a Facebook, which obviously is pretty heavily weighted in tech, but it also just so happens to be the most heavily weighted stock in XLC in the communication sector. You couple that with a good-looking daily chart, something we definitely want to focus on. So we do have a daily squeeze here. And at this point, tough to suggest you get long Facebook here. Typically for me, I'm looking to get long back here at the 21. And I want to be able to take profits on this push versus getting long at this point. So for Facebook, for AMD, for maybe even Tesla, I think you're better served waiting for a bit of a dip. But the structure here, I think you got a good shot for a move into all-time highs. So you got a daily squeeze coiling on up. And we did finish last week with the 4-hour squeeze firing to the upside. So if you do get a dip here, I think you take consideration to add in a long position. If the momentum continues into the open, for those of us that are long in the mastery, we're looking to take profits on a push through the previous all-time high. So if you get a dip to maybe the 8, maybe the 21, I think you latch on here because I do think you're going to see Facebook heading towards 380 pretty soon. At least just that's what the structure of the chart suggests is certainly possible. So if you're already long, I think you hold on tight. And if you're looking to get long, I think you wait for a dip. Wait for a dip there. And you know what? I mean, where are we going to open this morning? Bid in the ask is like 149. Facebook is one I don't think you have to wait for a dip. It's still setting up nicely at the buy zone. So just think of the differences here. Let's say that Facebook and Apple, they both, over the next 1 to 2 weeks, they both make it into +2 ATR. Well, if you get long Apple here, you got all that potential upside, where if you get long Facebook here, maybe you got another couple of points. There's just not too much reward left. So while you wait for a dip in Facebook, Apple is already setting up nicely at the buy zone. So we got long this on Friday, but I think you got the big three: trend, structure with a daily squeeze, and then momentum with some stacked EMAs and some green 10X bars. You also have a great looking 4-hour squeeze. You got a 2-hour. You have got a 1. You have got a 30-minute. You basically got a 15, and you got a 5-minute. So in plain English, you're at the buy zone and you're squeezing all over the place. If technology continues to grind higher over the next, call it 2 to 3 weeks, I think with this kind of setup in Apple, it's pretty much poised to do the same. So if the Qs are all over from here, then down goes Apple. But if the trend continues, I think one of the better looking setups in the market. So I'm long here for a push into new all-time highs with put credit spreads that expire. What's the actual date? September monthly expiration, which I believe is the 17th or the 24th. So I like Apple, where Facebook, Google, you definitely want to dip there. I think Apple is poised for a good entry where it sits now. So keep an eye on that one. And I would say with AMD, wait for a dip here as well. Is it extended? No. Is that the best entry? At least not in my book. Closer to the 21 EMA is possible, the better. But you got a great setup here. Beautiful uptrend, daily squeeze, and just super bullish. So when you have stacked EMAs and then you have green 10X bars on the monthly, the weekly, the 3-day, the daily, it's bullish stuff. And you got a 4-hour squeeze here. So I like AMD a lot. I like the structure of just AMD on its own right here, but I also love the semiconductors. And if you look at the weekly chart here, and again, I think you wait for a dip on AMD. The ideal time to get long, I think, was 2 weeks ago. Not just when AMD was kind of setting up at that 21, but when the whole group, SMH, pulled back to the weekly 21. Yeah, now that might look a little bit ugly on your daily chart, right? So if you're living and breathing on those shorter time frames, it's like, geez, look at the semis here. They're really taking the beating. Well, if you look at a weekly chart, it's more so like, no, it's just pulling back to the weekly 21. And typically that is, at least for me, that's my favorite time to get long some semiconductor stocks or technology, whatever the group may be, is when we're pulling back to the 21 EMA. We're within a really good uptrend. I'm not trying to load the boat on semi stocks and AMD and Qualcomm, Nvidia after we've already pushed for 2, 3, 4, 5 weeks. So if you can just kind of shut down a little bit of that volatility, tune out a little bit of the ugliness from a 30-minute chart as we're pulling back here, you kind of see it for what it's worth. A normal pullback and a really strong uptrend. So as the group is coming back there, that's when I think you're looking for something like an AMD. Because now if you can build your position in AMD as the semis are pulling back, imagine if the semis just turn the corner and the uptrend continues. Now you're getting long one of the better looking stocks in the group, just as you got that timing for the group to turn back towards the upside. So I think you wait for a dip here on something like an AMD. We're all waiting for a big dip here in NVIDIA, but I like the group. But in terms of the timing of an entry, I not only like it a little bit closer to the 21 than where we are right now, but you had the group pulling back with it. I think those make for some really good entries. So keep an eye on AMD. I think you put that on your pullback list. You can put Facebook on the pullback list. Definitely Google here. He's just a total beast. But you have Apple sitting right there at the buy zone. And then last but not least, at least on my list here of major focus, is Tesla. Not extended. So, in terms of things, I mean, where are we going to open up this morning? 7:15-ish? I know most of y'all know where I'm coming from. It's like, hey, if something looks like Google and it's up there at +2, +3 ATR, you've missed a move. You wait for a pullback. If it's like an Apple sitting right near the buy zone, if it's like a Tesla sitting right near the buy zone, that you can kind of work with. So I'm a big fan of Tesla here. Bigger picture thinking, and by bigger picture, let's just kind of talk about October. The weekly squeeze here, and you got the 3-day, you got the daily, but the structure of the weekly squeeze, I think you have the potential here for a really solid push into earnings coming up in October, which I think is going to be like end of October. That structure to me, as long as this holds up here, I think you got a chance at seeing Tesla get back into a bit of a trend. You got structure, you got a squeeze, you have a positive histogram, you have stacked DMAs. So I do think the weekly could give you a good couple months of momentum here. Shorter term, you got a nice daily squeeze with, let's see, you got a 2-hour here. You got a 1-hour squeeze. So in the short term, you got a daily and a couple of the lower time frame squeezes. I do think you could get that push into 740, 750 in the short term. I think you can work with a daily squeeze for that kind of move. Bigger picture thinking, when and if the weekly fires, I think you see Tesla get back into a bit of a trend. So I'm already long for September monthly expiration. And if you got a bit of a dip here, I would look to add a little bit more. But I'm trying to play this both ways. So I'll be looking for some trades that expire, next Friday, and then looking for trades that expire October, November. Just a good mix there of the shorter term structure with the daily and the 2-hour, the 1-hour squeeze, and more of a bigger picture, longer term swing with the structure here from the weekly and the 3-day. The 3-day looks pretty good. And I got a lot more here on the list, but as a general statement, that's the bulk of it here. I'm really just trying to focus on the best looking charts in the best looking groups in the market. So until something changes, I think technology, QQQ, XLK, whatever it may be, I think technology is one of the better looking groups in the market. So until something changes, I'm just going to have the assumption this trend is going to continue higher. So if that's the mindset I'm working from, then something like an Apple here is a no-brainer. That's why I like Apple. You got trend, structure, momentum, but it also belongs to one of the better looking groups in the market. In terms of Facebook, we're getting long a week ago or so. You have trend, structure, momentum, but Facebook is also part of the right groups here. Obviously, it's part of technology, but it's also the most heavily weighted stock in XLC, who also has trend, structure, and momentum, firing a daily squeeze here. So Facebook, I kind of feel like I'm killing two birds with one stone. I think communications looks really bullish. And if Facebook is the biggest stock in this basket, that's a bonus point. And then if I think technology is bullish, a couple of extra points there for Facebook. So I got my bases covered, I feel. For technology / communications, I got Apple, Facebook. I love the semiconductors. I think SMH on a weekly chart, one of the better looking trends in the market here. So I'm happy to have gotten long AMD on that pullback. And I think you got to like AMD's chart all on its own. Never mind the group it belongs to here. Really solid. Really, really solid. What else do we got, though? So long AMD, long Apple, long Tesla here. We took profits on Friday on XLC calls. I feel like we took profits on something else, but I can't remember. We have put credit spreads on IYR. So I think real estate still looks really solid here. And we got calls on the industrials. And I think the industrials still look pretty good here. And the only other group I'm trying to keep my peepers on is healthcare. So healthcare, XLV, kind of right along with technology and communications, really, one of the stronger groups in the market. So, up until this point, these pullbacks of the 21 EMA have been a good spot to get long. So, assuming the trend doesn't come to a screeching halt here, as it pulls back to the 21, I want to keep an eye on this, and I want to keep an eye on the bigger names within the healthcare group. So, like a Johnson and Johnson. Nothing too attractive just yet. Something like a God, I can't really think of too many healthcare names at the top of my head here, like a UNH. As healthcare is pulling back, UNH is pulling back. So if this starts to look nice and bullish and has a nice structure to it, that's what I'm trying to get long. In the strongest groups in the market, but with the pullbacks into a squeeze. So there's something else to keep an eye on, my friends. That'll be an interesting week, though. So let's see these futures here. New all-time high for the Qs. New all-time high for the SPY. The Dow pretty close. Oracle's a great looking squeeze, though. See, Shopify. Shop looks great. Honeywell, SQ, DoorDash, Docu, Yum. Yum looks good here. NET, mRNA, GD, Dish. Pretty straightforward stuff. There's just a lot of good looking setups out there. All of them in uptrends, all of them with good structure, all of them with a lot of bullish momentum. I think you make it easy on yourself. These are the kinds of things you want to focus on until something in the market changes. So I'm looking for more setups like NOW here. Just picture perfect. Uptrend, squeeze, and a bunch of bullish momentum. Give me as many of those as we can find until the market finally throws in the towel. But until it throws in the towel, any dip to the 8, any dip to the 21, any dip to the 50, I'm looking to continue to get long. So those are my biggest suggestions. Technology, communications, healthcare, semiconductors, all good-looking groups. And I think your Facebooks, your Apples, your AMDs, etc., they're all a pretty good-looking couple of charts there within a few good-looking groups. So let me get caught up in the chat here and see if there's anything you folks want to take a look at. Yeah, Adam, I like SQ here. So we started looking at SQ here in the morning call, really right from day one of this most recent squeeze. So I'm talking like it was forever ago, a few weeks ago. But I think we've been served well by being patient here. A lot of times it can be really tempting to jump in as soon as we pull back to the 21. But a lot of times they're going to squeeze for more than 1 or 2 days, which has been the outcome here. You just continue to squeeze. But I like the structure. So again, I think you kind of look at it, keep it nice and simple. You're in an uptrend. You have weekly, daily squeezes. You have squeezes everywhere. If the uptrend in the market continues, there's a pretty good chance the uptrend here in SQ continues. Nothing about this chart at all suggests otherwise. Weekly chart is nice and bullish. 3-day chart, nice and bullish. The daily chart looks good. I like it. And Riot, I like as well. Yeah, not bad. Now, I wouldn't get long up here. I'd wait for a dip to the 8 or the 21, but you got a pretty good structure. Brian, what's up, brother? Good morning. Miss Angela, my friend, Qualcomm, what do we got? Anything in the semiconductors I like. As a general statement, there might be a few in there. But I think just with SMH on that weekly, such a good looking trend here. Right? big push, pull back to the 21, big push, pull back to the 21, big push. Such a good rhythm to it. So my thought process is this trend probably just continues here. So something like a Qualcomm in its own bullish weekly squeeze, I think is poised for the same kind of move here. So I do like Qualcomm. I like AMAT. I like Broadcom, even TSM, pretty much everything. I don't like Nvidia because it's so extended. But yeah, I like Qualcomm here. And that's what is driving that bus, is SMH. So until things look drastically different here, I love that Qualcomm weekly. I love that Broadcom weekly. Pretty much everything in the group. Yeah, Daniel, Apple's been probably an interesting way to look at it. But I think Apple's almost been a bit of a lagger here as of late. Because the Qs have pushed nicely, Google's pushed nicely, Microsoft just went nuts. Nice move there. Where Apple has really just been squeezing away. Now, that can definitely lead to some frustration in the short term. It can also lead to a pretty nice break and run for it once you finally get going here. But I think you're bringing up a good point. And at least, when you bring that point up, what it reminds me of, at least in my game plan, is the importance of getting along at the 21 EMA and not trying to buy the breakout. Try to buy the breakout, you get stuffed, you get stuffed, you get stuffed. If you're long here at the 21, you comfortably sit through all that. It can try once, twice, three, four, and on that fifth shot, finally get the breakout and the run you're looking for, and you can ride that wave off into the sunset. Where trying to buy at the breakout, that's why personally I've never really been a fan of it. It's like I try once, I get stopped out. I try twice, I try three, I try four. By the fifth time around, I'm like, screw Apple. And then it usually makes the breakout. Dr. Steven, I like real estate here. So we've got some put credit spreads with short strikes at 107 that expire in a couple of weeks here. So I like the uptrend. So I like the structure. So everything about this looks good. But what I also like is just a lot of these names in that basket right here, like an AMT. I mean, to me, that looks like super bullish. Uptrend, a squeeze, whole bunch of green 10x bars, a name like PSA, public storage, right? Uptrend, momentum, names like, is it EXR? Yeah, check this one out. So as I'm running the scans over the last really 2 to 3 weeks at this point, like repeatedly, so many of the best scan results, and not even just the best of the scan results, just a lot of the results in general, real estate stocks. To me, a light bulb goes off. Now, I'm not going to put my whole account in this thing, but I'm definitely not going to ignore an uptrend, a squeeze in a group of stocks. Just like we wouldn't ignore that here on technology or healthcare. So definitely, real estate isn't as sexy, so to say, as a technology. And the cast of characters in real estate aren't as sexy as Amazon, Google, Facebook. However, you kind of start coming to the realization as a swing trader, you don't need 100, 200, 300 good trades a year. You just got to find a couple of good trends. And if they can each give you a couple good trades, it's usually more than enough here. So I do like real estate. I do. Hey, what's up, Calvin? Yeah, Calvin, XLRE, same thing. Such a nice uptrend, right? Such a nice uptrend. And then there's AMT, same thing. So I like that combo. I really do. I really do. Avner, 2 alerts. Where are you seeing the alerts, my friend? Let me know and I'll try to help you out there. Keyshore for Amazon. Here's what I'm thinking. I wouldn't want to take the daily chart to the prom. But the weekly squeeze, the weekly chart, well, that's something I could see myself making a long-term commitment to. Stacked EMAs, green 10x bars. You never broke structure. Histogram never went negative. There's a lot of positives here about this weekly chart. So, do I come in here and back myself into a corner where I need Amazon to return to its former glory by this Friday? Absolutely not. Do I come in here and maybe build a position to swing into earnings at the end of October? The weekly chart suggests to me you can get away with that kind of trade here. Maybe sell some put credit spreads, give it a good 30, 40 days, kind of set it and forget it. With that mentality and giving it that kind of leash and giving that kind of time here, there's not a damn thing wrong with your weekly chart. As a matter of fact, this is a buyable pullback, at least up until this point. Pull back to the weekly 50, you want to scoop a little bit. Pull back to the weekly 50, you want to scoop a little bit. Now here we are again. Might be something to take into consideration. So yeah, the daily is not the best here, but this is the beauty of a weekly chart. So look how out of whack and just funky the daily chart got here. But what did we really do? We just kind of pulled back to weekly support. Not much really happened from a bigger picture point of view. So it's been a while. It's been a while since I played Amazon. It's been a while. Hey, what's up, Tony? So, Tony, with restoration here, the uptrend is perfect. The weekly squeeze looks great. And you get a decent looking daily chart here. 2 things, Tony, to take into consideration. One, earnings is, we'll call it a week, just about a week. The second thing to keep in mind, though, at least in my previous experience, the spreads have been really difficult. A little bit like Shopify. It's really wide, nasty spreads. So just 2 things to take into consideration. You do have, I think, one of the better looking uptrends in the market, though. And I think a name that should get a little bit more coverage, so to say, than it does, because of the quality of the uptrend here. So technically speaking, I do like it. I do like it. Brian, thoughts on Ready Aim Fire Pro? Brian, it's something I'm going to have to really play with because, I mean, in a nutshell, really, here's how I look at the Ready Aim Fire. Now, I understand enough of it to know that, yeah, there's value to it. If you want to look to take and trade a particular move, then I think it can provide you with a lot of value. But think of the differences. And again, these are just differences. So for me, I like to try to catch the move away from the 21 EMA. So if I'm trying to short something, I want to get short at the 21, and I'm looking to benefit from the move away from it. Now, whenever I'm getting long, I want to get long at the 21. I want to benefit on the move away from the 21. Where that Ready Aim Fire is typically going to come in handy is if you want to play the move back to the 21. So I'm playing the move away from the mean. Where that Ready Aim Fire can really come into handy is when you want to play the move back to the 21. Now, here would be my suggestion. again, I need to play with the tool. I need to, quite frankly, take 30, 40, 50 trades using the ready aim fire to be able to give a good assessment on it. I wouldn't, in this market, use it to try to short something. Like Nvidia, right? Nvidia was extended for, I don't even know how many weeks here. Where I would say, hey, try to use that ready aim fire isn't for the move back down to the 21, but the move back up to it. And what I'm trying to say is find strong stocks, find stocks and uptrends, but then find them when they're just going through a bit of a rough couple of weeks, so to say, like a PayPal. Look for that kind of thing, and then look to play the move back to the upside, using the ready aim fire. Hopefully that makes sense, man. So, Angela, yeah, real estate premium is not the best. And really, even for a lot of the individual stocks in real estate, AMT, etc., they're just not the most liquid. So, you kind of got like two choices. You're either doing an at the money put credit spread. So in this instance, you're going to sell the 107 put, and maybe even then the risk reward might be a little bit iffy. So you're either doing that in at the money put spread, or I would buy the calls. Like with the industrials here, we bought some calls. It's just not enough premium to get a good risk reward, really. Um, yeah, Jason. So anything real estate to me looks good, and then let's check out utilities here. Oh, good eye. Yeah, good eye, Jason. So not the same trend, right? Not the same trend, but you want to keep an eye, I think, on the utilities here from a similar perspective of, why do we want to look at real estate or healthcare rather? You've got trend and momentum, and you're getting to pull back to the buy zone. We at least want to go look and see if there's any beautiful setups within that group. The time to get long, say UNH, is not just when UNH is pulling back, but when the group it belongs to is pulling back. Because now if XLV just kind of rears its head here and makes another run to the upside, well, now you're adding some edge. Now you're getting long that already good looking setup. Same time the group it belongs to is gearing up for another leg higher. So same perspective, a bunch of momentum here, right? Solid trend. Now is the time to start looking within that group. So you look at the top 5, 10 names in the utilities, see what you got in there. That's the time, though. This is the time, not a week ago. We've already exploded and we're already making that move higher. You might get lucky. You might come in here and you might catch a little bit more, but it's so quick to give it back up. Here's where we get long. And then we just take our profits into the strength. By the time all the chasers call them, by the time everybody finally wants to buy utility calls, well, you're getting them down here and you're going to hand it off to them. Like, yeah, you can take it now. And you can get smacked when we pull back at the 21. They're going to buy it from you here. They're feeling all kinds of pain on that normal, healthy pullback, and they can't take the pain anymore. Right? So smart money's getting long here. And I don't want to say dumb money. I'm just going to say new traders get long here. So the money just transfers, the shares, the calls, they just transfer from the experienced to the inexperienced. And the inexperienced panic and freak out. They got to get stopped out. Now, guess who's probably going to come in here and buy it again? The experienced. And then the trend continues, and everybody wants to chase it. And it just kind of continues. QQQ is the best example of this. It's all just like psychology. Smart money's going to get long here. Every single time, that's where the big money's getting long. And where all the retail traders get comfortable getting long is up here. FOMO's coming in. They're seeing everybody making money, buying every dip works. It's just that transfer of capital. You want to be on the right side of that. So I'm not even sure why I went on that tangent, but hopefully it made some sense. Sometimes I get going. I'm like, why did I even get going on this topic? Bo the cat. No, Bo, I'm back in the options room today, my friend. Back to the typical schedule. I was just on a bit of a vacation last week, but I'm back in the options room today looking for trades for us. Same time as always. Autodesk. Ryan, I think I might like this one. Let's find out. Let's see. So, see how the weekly chart just gives you a little bit of context? All you did last week was pull back to the weekly 21. Now, maybe not immediately, but if this trend is going to continue, nothing that happened here brought the trend to an end. You got to be able to see through that short-term weakness and just kind of line that up with the bigger picture trend here. That might have looked ugly on a daily chart, but it was just a pullback to the weekly 21. That's where smart money starts to pay attention, and then they're catching the next leg higher. So I like the pullback here on the weekly chart. You got a good squeeze, you got stacked EMAs. Yeah, nothing wrong with that weekly at all. And your daily just kind of came down towards your 50. So daily a little bit messy, but not even all that bad. Actually, you know what? I'm going to give this thing some credit. You get one hell of a gap down here. You still got stacked EMAs. Yeah, pretty impressive. Pretty impressive, I would say. Daniel, for real estate, you want to look at IYR or XLRE. And check out this website, gang. Right. For those of you that watch Roggy, you've seen this plenty of times. I'll paste this here. So ETFDB, this is nice, right? So come to the website. We'll do healthcare, right? Look at XLV, which is healthcare. Then come over here to holdings. So remember, XLV or XLK, XLF, these aren't companies. They're just baskets of stocks. Here's the stocks that make up that basket. So if XLV itself, right, the basket is one of the strongest baskets in the market, and it's pulling back to the buy zone, well, now what I want to do, we could always just get long XLV, but we might as well take a look at the top 5, 10 names in that group. See what's setting up out there. See if anything looks attractive as the basket is coming in a little bit. So you got Johnson & Johnson. You've got UNH. Right? You got Pfizer. All pulling in with the group here. ABT. That looks bullish. TMO. That looks really freaking bullish. ABBV. Eli Lilly here. So kind of a perfect example. This has just been in a nice uptrend because healthcare has been in a nice uptrend. This is pulling back a bit here because healthcare is pulling back a bit. But you got an uptrend with stacked EMAs, a bunch of green 10x bars, and a brand new daily squeeze. So I'm not saying that this A has to go higher again, and I'm not saying B that it has to go higher immediately. But just taking the trend for what it's worth, should the uptrend in healthcare continue, maybe not this week, maybe not next week, but just generally speaking here, well, this uptrend should continue as well. Very much like our trade from Goldman Sachs. Goldman's just waiting. But once XLF goes off to the races, goes Goldman as well. So I do like healthcare here. But yeah, check out ETFDB. It can be really useful. I mean, that was what really kind of made Facebook a no-brainer for me. It's like, hey, XLC looks good. XLK looks good. Well, let me go look at that group. If I think communications is strong right now, is there anything in communications setting up with my go-to setup? That daily squeeze of the stacked EMAs at the 21. So you go in your holdings here, boom, Facebook, Google, Comcast. So easy at that point for me to go look through a couple of those names, and it's like, hey, here's my go-to setup in Facebook, a daily squeeze at the 21, yada yada, and this is in the right neighborhood, right? It's part of a really strong group right now. That's how I like kind of narrowing down that focus list. I mean, compare energy. I don't really want to trade anything in energy right now. So my focus list is going to kind of be a reflection of that. There's going to be more stocks like industrial stocks, healthcare stocks, technology, communications, etc. Follow the money, as they say. Thoughts on mRNA? So, Tony, here's how you have to look at it. Right? I think the absolute best thing that we can have on our charts as traders are these Keltner channels. Right? And the reason is really simple. Right? We have that 21 EMA and the Keltner channels on our charts. It tells us everything we need to know. So, Tony, even with mRNA down maybe 4% or so on Friday, this thing has done absolutely nothing. Right? Think of what we're measuring here. Average moves, right? So the average move here for mRNA is just being measured by those Keltner channels. So an average move to the upside is from the 21 EMA here into about 477 and change. Average move. To the downside, right? Same thing. Average move. So when we look at it from that perspective, mRNA has actually been pretty damn lame for the last few days. Even there on Friday, it made what, half of its average move? Even on that day over here where it looks ready to explode, what was that? It was just an average move. As swing traders, we gotta be careful about being emotionally tied or emotionally attached to average moves, right? And before I let you all go, a favorite example of this was a Google trade that a lot of us in the options room did earlier in the year. Look how much crap we had to sit through. But it was all just average. That's a daily squeeze, and it's a daily squeeze behaving perfectly fine. So over time, we got to get more comfortable and develop that fortitude, so to say, to sit through the +1, -1. A lot of times, your reward for sitting through that is that squeeze that tends to fire in the direction of the overall trend. Right? So you find a daily squeeze, you're sitting through some BS, tends to fire in the direction of the trend. Right? You get a daily squeeze, you're sitting through some BS, tends to fire. You get a daily squeeze, tends to fire there. So, believe me, that can be a bit uncomfortable. But I think before we ever pull the trigger on a squeeze, that's what we got to jump into that trade knowing damn well. It's like, hey, if this thing is going to behave 100% normally, this is what I'm in for. I'm in for a big cluster, of just average noise, back and forth. So when we're getting along Facebook over here, I'm already jumping to that trade knowing damn well, hey, this sucker is probably just going to float +1, -1, +1, -1 until we finally get something going. So take that into consideration. Take that into consideration. So Louis or Lewis, that's a good question. A lot of times, I think it just depends on your strategy. So I like to sell put credit spreads. To me, that's kind of the bread and the butter. A lot of times, like something like an XLC here, a lot of times the ETFs just don't have the best options to do put credit spreads on. The risk reward really isn't worth it. So that's when it's like for me, hey, what inside of this basket could I trade as my go-to setup? So long as it has the trend, the structure, the momentum I'm looking for. And a lot of times it's like, hey, I'll take Facebook here. If XLC goes higher, it's basically going to be because Facebook went higher. But then there are times where, say with the industrials, it's like I'm just going to buy calls, right? I can't do a put credit spread. The risk reward isn't all that good. And sure, I could go look to do a spread in Honeywell or 3M or UMP, but let me just buy some calls and kind of keep it simple. So I think it changes depending on what is the stock in question. Punk Tesla, pretending it's ready to wake up. Bookface is looking okay. AMD is doing its thing. See how real estate's opening up flat here. Alrighty, so let's just take a quick peek. So we're at that point here where this daily squeeze can fire along and we could rally for another week straight. But we're also at that point where there is a growing probability that we've made a move here into about 2 ATR and that we might dip here a bit, all right? If we start to dip, understand all that is a healthy little pullback, right? Because a couple of weeks ago, everyone's trying to get bearish, and here's the top in the market, and it's time to jump out of our long positions and short everything. It's just a pullback. And that pullback tends to happen once you're up here around 2 ATR. Not saying we're going to pull back. I'm just saying if we do, I think you want to stand down here drooling, looking to buy the dip on names like AMD, Tesla, Facebook, Google, etc. All right? But I'm going to let y'all go now. Good stuff this morning. I will be back again Wednesday for another round of pre-market prep. But just to reiterate here, I think you're looking for dips in names like Facebook, dips in names like AMD, names like Tesla. Good trends, good structure, some good bullish momentum. You just want to pick your spots wisely. And at least in my book, the wise spot is down here at the 21 EMA. All right. Talk to y'all soon. I appreciate your time. For those of you in the options room, I'll see you in about an hour or so. For the rest of you, I'll see you Wednesday morning. Be good.